Well, a new report says that inflation in the United States moved slightly higher last month. The spike was fueled by higher costs for hotel rooms and groceries. Consumer prices rose 2.7% in November from last year. The inflation figures are the final major data piece that officials from the Federal Reserve will consider before they meet next week to decide on interest rates. And for analysis, we turn now to Patrick Horan, research fellow on monetary policy and the Federal Reserve System at George Mason University. Great to be with you. So put these numbers into context for us and what it all means.
Sure. So the inflation, the CPI numbers for November were roughly in line with what was expected. And frequently people look at the headline number and then the core number that strips out food and energy, the argument being that those are volatile categories, so core might be a better indicator of where headline is going next. So both those indices rose 0.3% from the previous month. Headline was 2.7% from the previous year, as you said. Core inflation was 3.3%. Now, what that means, though, is that inflation is still pretty hot. The Fed's goal is to get inflation down to 2%. And now they actually look at a different indicator called the PCE inflation. They look at what's called PCE inflation, not CPI. Even so, though, we presume based on this CPI reading, PCE is still going to be above 2. So we still haven't gotten inflation down to where we want it to be.
Yeah, and Patrick, for those of us that aren't economists, in layman's terms, what does this mean for consumers?
Well, the Federal Reserve is expected to go through with an interest rate cut next week at its last that's, as you said, it's going to be its last meeting for the year. Now, normally you want to raise your target interest rate if inflation is too hot, not lower it. However, they had said in the past, well, we think we want to cut our target interest rate a bit just to make sure unemployment doesn't rise. So what I think is going to happen is that unless something major happens, the Fed's probably going to go through with its interest rate cut next week. But then it will pause further cuts into next year, and then what interest rates will look like will depend on what the data looks like as the new year starts.
Yeah.
I would say that interest rates are probably going to be higher for longer than people were hoping a few months ago. A few months ago, inflation looked like it was on its downward trend, and unemployment was rising. Now we're sort of seeing the opposite situation.
Yeah, there was a survey that was released earlier this week by the Federal Reserve revealing that households are really feeling optimistic after Donald Trump's election, and they're expecting their financial situation to improve. What do you think is fueling this optimism?
Well, it's hard to tell. It could be there could be the consumers might be thinking the new president might pursue some good policies. Maybe he'll get rid of some bad regulations, or maybe he'll cut taxes more. I think as the new administration starts and we'll get kind of a better sense of their priorities, we'll see if that's true or not. I suspect a lot of people think that President Trump is business savvy, and I think that's probably why they become more optimistic.
Yeah, not a whole lot of time left, but Patrick, your predictions as we end the fourth quarter.
Well, unemployment is still pretty low. It's ticked up a tad in the past couple months, but it's still at 4.2%. I think back in September, in August and September, the Fed was afraid, unemployment might rise a lot and we might be in a recession. Hence, we're going to start cutting the target interest rate rather than keeping it where it is. I think labor markets are still looking pretty good. I am an optimist by nature, but I do think we should be leery about inflation. I think we don't want to be complacent on it. I hope that the Fed really takes inflation seriously after this week. I hope they don't cut interest rates too much too quickly. Otherwise, I think we could see inflation reignite, and that would hurt a lot of people, especially those of lower income.
Yeah, definitely. Patrick, thank you so much for your insights. We appreciate it.
Thank you very much.